Hey everybody, I am Howard and this is Otto's Retirement Corner. So let's talk about banks, and in particular retail banks, which would serve individuals as customers. Now, I was watching a video about a week ago from Ben Felix, and again, if you're not familiar with Ben Felix, look him up. He's Canadian, lives and works in Canada in the financial industry, and has some great financial videos. Not only for retirees, but just in general. I highly recommend him. He's got two different channels. Look him up on YouTube, watch his videos. So he was doing a video about, and here's the title of it, Bank Financial Advice is Worse Than People Realize. And he sort of cited a study by the Canadian Broadcasting Company, which did in essence an expose on retail banking in Canada. Now, in my eyes, this is not particular to Canada. I went on Google Scholar and looked up some other studies that looked at banks not only in the U.S. but around the world, and they kind of found the same thing. And I worked in banking for a couple decades. I never worked on the retail side. I never worked with individual customers. I was on the corporate side, but I learned the structure of banks, how banks work, what their goals are, how they incentivize people, and how they accomplish those goals or not accomplish them in some cases. And hi, Otter. And if you hear panting, he's right here. So getting back to banking, not only as an employee did I see how banks work, but as a customer. And having friends who did work in the retail sector. I also worked as a commercial banker where I had, large commercial corporate clients, and the structure of the organization was kind of the same in the way they worked as the retail banking, in that it's a sales organization, pure and simple. So, here's what Ben Felix reported on. They found there was questionable advice, inappropriate products, poor financial planning. There was a question whether it was due to conflict of interest or lack of knowledge. My personal experience is it's both. The training is not great. These are not certified financial planners or certified financial advisors. They do have to get licensed, especially when they're selling securities. They'll typically get a Series 7 and additionally a Series 63 or 65 or 66. There's a Series, I want to say 73 for insurance products, but that's a little bit beyond what we're talking about today. So the transactions they recommend tended to lean towards the bank's interests or the bank products. So banks will have mutual funds, banks will have deposit accounts, banks will have CDs. Typically what you'll find are if they're steering customers into bank mutual funds, they bring in those fees that the mutual funds charge, as opposed to going with a EFT or a mutual fund from Vanguard or whoever, which may be much lower. The CDs will typically pay lower than you can find elsewhere. The deposit accounts will pay lower. And I want to exclude online banks because you can find some really great rates from online banks. There's no advice, there's no advisory. You go online, you find the bank, you say, here's my money, give me this rate. Personally, as I've spoken from before, I'm not a fan of CDs. The only time to get a CD is when you have a amount of cash you need very soon, which could be a year or two or three, but you definitely need that cash to be there. Before we bought this house, we had a chunk of money we were putting aside to buy the house, so we did put it in a CD, or two CDs, because they're only FDIC insured up to $250,000. So, we cut it up between, I want to say, Ally, which is a GMC company, and Sally Mae, the student loan organization. There's a lot of organizations out there beyond just banks offering CDs and deposit accounts, savings accounts, where you go online, send them the money, you get a rate much better than you will in a bank. In my mind, there is no reason to have any money at a bank besides a checking account. No reason. All right? Now, you'll get into a relationship with a banker, and you'll tend to, here's what I find, you'll tend to want to make them happy by keeping your money with them. It helps the relationship. You feel good about the relationship, and that's sort of how they work. When I was a commercial banker, I saw this in action. I didn't try to manipulate this, but I acted as a consultant. I gave them financial advice. I would look at their financial statements. I would look at their operation, and I would say, here's what I think is best for you. Not only in terms of deposits, but loans and treasury management products. Now, the dark side of it is our bank, and I've worked for 5 different banks. At that time, I worked for, it was initially Bank One, but then it became JP Morgan. And when it became JP Morgan, it became brutal. There'd be a flavor of the quarter. Here's the product we're selling this quarter. Go out and sell this product. My customer doesn't need this product. We don't care. Sell this product. This is how you're going to make money, and this is how you're going to get rated well, and this is how you're going to get promoted. You sell the products they want you to sell when they want you to sell them, and it works the exact same way in the retail side. We're all familiar with what Wells Fargo did, just absolutely creating accounts for people out of nowhere because they had this goal of creating so many accounts. So banks set up these sales incentives and say, go out and sell. And it's not just, well, okay, if I can, I will. It's no, you will sell these. And I felt horrible about it. I had to do that. I tried to do it as seldom as possible, and I tried to make it fit as best as possible with my clients, but that's why I got out. That's why I went into the credit and risk side of banking as opposed to the banking side. I'm a little bit more analytical, so I tended to like that a little bit more. The studies I looked at, showed that financial advice given to traders tended to have lower returns for those traders than when they acted independently. There were some benefits. They help customers diversify. They help customers sell losers quicker. But the overall results were that if you're trading on the advice of a banker, you will do worse than if you trade on your own in general. Now, there's some biases in there because people trading on their own, tend to know a little bit more. But that's the whole point. Go out and study, go out and research, go out and get some help. I'm not against certified financial planners or certified financial advisors. I prefer the fee-only type where beforehand, hey, I'm going to pay you $500 or $1,000, regardless of how much money I have, and you're going to help me decide what to do with my money. They have a fiduciary responsibility, which you also won't find in banks. They're there to give you ideas and advice, but they tend to lean towards banks. So tell me what you think about this. Do you have relationships with banks? Do you do anything more than just checking, and why? I don't mean to get you to be on the defensive. So if you have a lot of products there, understand that what I'm saying is it may not be the best thing for you. I can't give you personal financial advice individually, and unless I were to know your entire hi bud. Unless I were to know your entire portfolio and your situation. So I don't do that. I can't do that. I'm not a certified financial planner or advisor. But in the comments, let me know. Let's talk about this. What's the role of banks in your life? What do you believe banks should be or not be doing? What do you see, not only with your personal, but friends, relatives, whoever you're aware of, and talk about it. So again, please subscribe. Please like. Comments. Let's have some conversation in the comments. I love having conversations. That's kind of what it's all about. And see you next time. Thanks. Bye.